Well, hello, good morning, and welcome everyone to the AgYield War Room. I am today's host. Everyone knows me. I'm AgYield's marketing manager. Everyone's favorite backup host, Jack Coakley here, filling in for Dan today. So let's get things rolling as we always do. First off, feel free to join the discussion. Post a comment, email us at info@agyield.com. We always like to hear from people and find out what's going on in your life. Yeah, I haven't heard from Nick Fry in a minute. Hope he's here today, and I hope he's got some silly comments prepared for us. Anyway, let's jump right over to Johnny with overnight numbers.
Yes, sir. Good morning, everyone. May corn down 4.5, 428 last. Dees corn down 4.5 as well, 463.5. May beans down 6 3/4, and Nove beans down 5 3/4. Outside markets, crude oil a little lower, but stock markets are higher. I will mention though, looking at moving averages, and I know we've talked about the 20-day, which we were below it since Christmas. Held it since the beginning of March, and now we're below it again. I know it's kind of been touted, but I think a lot of traders are following that moving average. So just something to keep in mind, and that is at 435.25 off the May and 469 off the Dees. So going into a report tomorrow, we'll just see how the funds want to square up before going into the report. So.
Thank you for that, Johnny. Let's kick it around the room for discussion. Again, guys, it is a happy day before report day. Lots of thoughts and ideas being thrown around and different discussions being had all across the country. So I'll kick it over to Dustin to share a little bit more.
Thanks, Jack. We have arguably the second or third most important report of the year, planting intentions, and the reason it's more important is new data. The survey that we get for stocks in the bin and at the commercial, and as well as what growers intend to plant, that can be way off from estimates a lot of times. We have anecdotal data from different seed companies that have just given us, given public statements of what they've sold more of. We have a lot of data that would be tracked, such as like ethanol production through EIA and total actual shipments from Dees 1 to March 1 for exports. So there's a lot of things that should be known into this, but we still can see these surprises on the stocks, especially. So one thing to keep in mind is whatever we think we've measured as a private, the private side of the market, not what the USDA is going to report, we can still be thrown for a loop when the USDA actually shows the count. And it could be something from, stocks in transit at the time, or just from the base that they're surveying from. It's still a sample size. It's not reflective of the whole. And if it's, we've seen up to 300 million bushels of corn swings on March 1 from Dees 1 on the expectations in either direction. Things to keep in mind on whether you're looking at the corn one or the bean one for stocks count misses from estimates, is that as a percentage of use, it's going to be a much bigger thing for beans, more than likely. We're way tighter projected on beans than we are corn. So if we find an extra 100 million bushels of corn or lose an extra 100 million bushels of corn, is it really going to change the outcome from a stocks count? I don't know the market cares as much about that as it does the bean side. I think beans coming from a much higher ratio. If you find more stocks than expected, that could be extremely bearish. You lose more stocks than expected, it could be extremely bullish. My 2 cents would be maybe look for a little bit more volatility out of the beans on this report. And interestingly enough, we're we actually have a smaller volatility on the new crop options on the beans. So maybe there's where the mismatch for those that are pro consulting customers that have seen our recommendations out the last couple of days to help kind of explain why we're tackling that side of the market. Is that volatility versus the protection we actually need is where we're matching up.
Thanks for that, Dustin. Let's shoot it over to the our geopolitical correspondent and the Walter Cronkite of the Eastern Corn Belt, Mr. Ben Wigington.
Yeah. Just looking around, I think everyone knows the geopolitical situation's not really having a significant impact on our markets at this point. There's definitely concern in the Black Sea. From a bigger picture, though, I think it's worth mentioning that the report also coincides with end of month, end of quarter, and there's some pretty large positions on. The equity markets have been very strong. Commodity markets have been, with the exception of a couple outlier sauce and maybe some of the metals. We've seen the grains be really weak for good reason. But with the notion that when the last time the Fed met that there was going to start to reduce rates, potentially at some point you might see an unwind of some of this trade. And if you do see that, it may create some of the best opportunities for the year. That's just a larger time frame money flow type of trade. And we've said before that, it would be atypical for managed money to carry really big short positions into the growing season, the summer months, especially when we get to the June, July timeframe. So we'll see how that plays out. But I think from a bigger picture, it's worth keeping an eye on. But I still think that outside of a major weather event, you're not going to do a lot to disrupt their markets.
Definitely. No, I appreciate the input there. Brian, I personally, I'm heartbroken that we won't have a Fun Fact Friday this week and we won't be able to hear from you on the show. So I just wanted to ask you real quick. I know you're basically on phone calls, all week long talking to farmers across the Midwest. Where are farmers placing their focus right now, and where should they be placing their focus?
That's a good question, Jack. Yeah. It's a different question for every grower. Guys with the unsold in the bin, looking for strong basis to get some bushels moving before they get in the field. And you're seeing that from some elevators, trying to get those bushels moving with strong basis. And the other flip of the coin is, you got to protect new crop. You got 2 crops to worry about. So, trying to protect that as well going into this report has been a key for these growers, just to try to get some comfort here, keep upside open. Hopefully, if that appears to lay into some sales at a profitable level. So you're seeing kind of both sides of the coin, both old and new, just to try to protect it and get some sales moving before they get in the field.
Love that. Appreciate that. Let's shoot it over to Ryland to talk a little bit more about livestock.
Yay. What's going on, Jack? We had a little bit of liquidation here in the live cattle market. Seems like the momentum and the trends starting to turn a little bit lower here. Really hasn't been too much cash trade so far. Nothing of note, really. I mean, we've seen just a little bit of lower trade, maybe a little light 184 on some heifers yesterday in the south. But it really wasn't enough to really say that's going to be definitive for the week. So it really just seems like you got a lot of concerns since the cattle on feed report. And right now it looks like some of the big longs may be starting to exit this market just to some degree, just another side of caution here, especially as we're nearing some of these longer term moving averages like the 100-day stuff that's way below the market. So we'll see if those support levels will hold. It's not without opportunity, of course. Anybody that's been pretty aggressively hedged, there could be some options here just to consider with reownership. But other than that, I think it's more of a wait and see kind of mentality right now with just how cash finally shapes up in the cattle. In the hogs, focus is really going to be on the hog and pig report. We got the initial impressions and the estimates yesterday, so it looks like all hogs and pigs March 1 looking for 100.1, kept for breeding at 97.1, and kept for marketing 100.4. There's going to be a lot of emphasis on the kept for breeding number this year, just because we know that there's been a pretty active amount of sow liquidation. So those are going to be the numbers to focus on. It also changed the farrowing intentions for March, May, and June, August, both looking to be down about 2%. But what we kind of lack in farrowings, maybe we'll see a bit of an uptick in pigs per litter. So they're looking for about a 103.3 for pigs per litter. So I think we're at a higher price level, may see a little bit of caution in the market before that, but otherwise those are going to be the numbers to focus on. It's coming out on Thursday, close Friday, and then we'll trade the report on Monday.
Excellent, Ryland. Thank you for that. And of course, if you have questions for Ryland or any of the guys, you can reach out to us, AgYield.com or info@agyield.com via email. Just to some house items before we wrap up this morning. Tomorrow, we have the annual planting intentions report, and we will be streaming live, get a bonus war room. We'll have the guys on and be discussing what that report looks like and other elements of that nature. And as always, we're streaming live on YouTube, X, Facebook. I want to thank everyone who tunes in every day. Thank you, Nick Fry, for answering my call and leaving a nice comment. I think that'll do it for us. Any closing shots from the crew here?
No, all good.
Sounds like a plan. All right. Well, everyone have a great day. We'll see you tomorrow for 2 episodes of The War Room, and we'll talk soon. Thanks, everyone.
Thanks, Jack.
All right. Thanks, Jack.